It's Louis here. I hope you're all well. Taking a look at Quant on the weekly, we are seeing this inverse head and shoulders starting to take some more shape over here. Shoulder, head, shoulder, which we've previously spoken about on this channel. We need to, of course, break the neckline, which we have not done yet. So this pattern's target of $400 is not valid as of now. However, we do want to keep this at potential play. And to do so, we need to keep this right shoulder above $83 right there, this range low. When you eventually lost this range low over here with the close over here, you spiked down and you found a new support in and around $50, I think it was, if I can turn on the drawings now for you. So we have a nice psychological level of $50 where we wicked off here, closed nicely over here with the bodies, holding it as support, as well as this white line. Okay, this white line over here is the 200 weekly EMA, so it's very valid. This quant chart is the quant chart with the most price data going back all the way to 2018. If you don't have this chart at all, it's in the description down below. If you do appreciate that, leave a like, of course subscribe. We're on the road to 5k. Do not forget to comment, but also we have a 50% discount running until Monday on my course. It's down from £300 all the way down to £150. There's over 30 plus videos that are 6 hours long. There's so much to get into, but briefly it goes through mindset and psychology, strategies that were taught to me from my mentors, but also strategies I came up with completely by myself through the £10,000 that I had to go through, as well as the 4 years of market experience. Not only this, you get to see what my crypto portfolio is like, but also you are involved in my crypto chat for free until my bull market targets. If you want to take action as soon as possible before Monday, while this discount lasts of 50%, please head over to my Twitter. It's also the second link under this video, Louis_crypto. Private message me there and we'll get you started as soon as possible. So let's continue with this quant update. We've been speaking about how this correction completely mirrored this over here. We're just trying to come back up and reclaim some key EMAs. But what is so amazing that when I look at this price chart, of course this is mirroring this correction, but I like that this is the first time the 200 EMA ever appeared in this correction. You wouldn't have had that. So imagine when you were, bar replay, sorry guys, bar replay is not available on this. It is on the regular quant chart, but the regular quant chart doesn't go back to this. But my point is, when we were down here, how could you expect upside? You didn't have any EMAs under you because there was not enough data, there was not enough weeks on the quant chart to show you that there was a 200 EMA hit. This over here was the 200th week, and you can see over here slapping support, holding it as support. We have wicks going lower, but bodies not closing lower. So that's amazing to see. That means on the weekly time frame, you are bullish as long as you're above this. This is the trend indicator. So what the 55 and the 20, the 55 being the orange, the 20 being the purple, this weekly crossover, bearish crossover here, when the orange goes over the 20, is signaling you're now confirmed in a bear market. You can see by the time it crossed over, it was a bit late because I was telling you guys way back here, we're going down, and I was getting laughed at multiple times when we pumped up over here, the amount of hate, and over here as well, the amount of hate I was getting. But we ended up being right, doesn't matter. I'm now seeing this inverse head and shoulders, and hopefully this does play out for us, guys. I do want to see that. But again, I would not be surprised if we do start to come down, because that is something I was warning you guys. The first week that we closed at the 55 EM, I said, guys, we do have potential target at 130 to 150, but I'm not going to expect any movement. What I can tell you is now we're trapped between the 55 and the 20. And if we were to ever lose the 20 or 83, we're going to head back lower to in and around this area, the 60s. So let's now take a look at that closer with the drawing, so we can see our ranges. I'm on the weekly today because it's much clearer. There's less mess on the charts. It's just showing us what we really need to see, the most accurate information, because the higher the time frame, the more accurate it is. This is everything that I've been teaching today. If you're not getting it, it's all explained in my course. And don't forget, this week only it is 50% off, and then returning back to 300. So yeah, if we ever lose this, we have a technical target ready, because if we now head over to the daily really quickly, back over here, I had a lot of people saying this is an M pattern, this is an M pattern, but I personally know, and I've been telling you guys for months and months on end, almost a year now, or even a year plus now, that an M pattern or even a W is not valid whatsoever until you close below the neckline, a daily close or whatever time frame you're on that you're seeing the pattern. If it closes below the neckline, the pattern is valid. Let's say you close down here, the pattern is valid. If you close back above it, the next candle, it's invalid, so you're not going to the target. That is how trading works. So here, while everyone's screaming M pattern, I was actually telling you guys, no, it could be, so let's prepare for it, but I'm not going to scream down your throats this is an M pattern. What I'm personally seeing is this ascending triangle, and I gave you this technical target to about $130, as we can see here, and that was a very nice trade. Over here, we did anticipate we were going to try and continue and push to 150. Why? Because this is the psychological level that is, when we lost the support, sent us much lower. We do have a wick here at 134. That's exactly where we respected as resistance. So basically, you've turned this mega support into mega resistance here, and that's why we dumped. And over here as well with this lower high. This high is lower than that. So that's bearish. So that should signal we should start to head down. And if we're consistently getting these lower highs, we should expect further downside. But if you're not closing below this, then I can't say we're going down, okay? But although we're seeing signs of saying, yes, we should go down, obviously we're in a downtrend. So you're going to consistently see lower lows and lower highs. That is what's meant to happen. But once you got this lower high here, you need to see a lower low. That means this next low needs to go lower than this. So I've always got targets prepared. We spoke about in the channel. I was getting laughed at completely saying $16. But if you remember back over here when we were dropping, I said at all costs, we don't want this high over here, this wave one high loss. So that's why I was telling you, Quant is coming for this level. It doesn't mean it's going there. It's going to try and go there. There are a lot of support and resistances before this, before it can get there, which will not allow it. For example, this key $50 psychological level. It's so important because it was very key resistance, not allowing us for months and months and months on end, almost 6 months of resistance until you eventually broke out. And look at the spike from there. Now you've come back, you've corrected all the way back down to that area and you found support. Not once, not twice, but 3 times. The second time going through it, but coming back up and holding it as support. So amazing to see that. And now look at the pump. Nothing has changed since we first said, okay, now we're here. Let's not get too excited. We're not expecting any movement, but we had that final ascending triangle to $130. And we could basically confirm this as resistance. What I would say though is, even if you want to break above this and flip it bullish again, this bear market red box, you need to reject it at first. So actually, even if you are bullish, you need to understand that you should reject this as resistance. I do not want to see us after this massive pump to then randomly push through that, because the most likely scenario is this afterwards. You don't want to go up in a straight line. Look what happens when you go up in a straight line. Invalidate all of it. So if we started going up in a straight line here, you'd invalidate all of it basically. We do not want to see that. We want to hit resistances, reject them, come down, find key support, and then try again. Again, if we're not holding this, we're falling through to the level below. I've measured from the low to the high over here. If you appreciated everything today, like, subscribe, comment, and share the video. Don't forget, road to 5K on the channel. Let's really push for that now, guys. But yeah, you can see if we do lose this, we're going to retrace. Obviously, the low, the support is $50, but you have a double bottom over here. We've been speaking about the channel for months now. But yeah, never really tested as support, so that's why potentially it could fall through. I've given you $50 as the support below. But yeah, the target out of this potential head and shoulders over here, which we're seeing on quite a few cryptos, like Bitcoin. Go check out today's Bitcoin update, and you can see the target is back down to this W's neckline. But because it was never confirmed as support, you could fall through it, preparing you with a $50 technical target. But yeah, finally, to leave you guys off, we know about the inverse head and shoulders over here. We need to hold this right shoulder so we can start to break out. The neckline is around $120, something like that, in around 120. So if we're breaking above 120, then we got this next fat resistance at 150. But yeah, step by step, and I'll be here along the way. If we're closing above resistances, I'm going to say, yeah, now we're going up. If we're losing support, so I'm going to tell you guys, no, we're going down. And you have to apply yourself with what I'm telling you, because I'm not going to spoon feed you. Well, I am, but I'm not here to put in the trade for you guys. You need to apply yourselves. And all the information that you need is in these videos. But if it's too tough, head over to my Twitter, Louis_Crips, and we can get you started in this course so you can pretty much understand everything by yourself without my help. Thank you guys so much. I do have one slot on the mentorship opening, so if you're interested in that, please take it. The mentorship is not 50% off, the course is, because I have a few people getting confused. But thank you. I'll catch you in the next one. Like, subscribe, and comment, and peace.